Hey guys, how's everybody doing out there in YouTube land? I need to tell the guys in Discord that I'm in here. Anyway, for those of you that are here, thank you for being here. Oh yeah, the Discord window's shut. Of course, I know I'm not sharing the screen. I promise I'll remember to share it. So that's probably 50-50, but I will. Let me just tell these guys we're in here. All right. All right. How's everybody doing today? There's one of you here. Hey, Marcus, how are you? I appreciate you being here. Or Mark. Marcus or Mark. Live. Let's see. Let's share this darn screen. Is there any earnings trades we need to look at? Did you guys see the little quick earnings show I did earlier? Let's go look and see on earnings. So I did remember to share the screen. Let's look on earnings. See what we have. All right, this morning we had JP Morgan, BlackRock. After the bell, I haven't heard of any of those. Have you guys heard of any of these? I mean, I haven't heard of. Anyway, all right. I have heard of ASML and J&J, GS, Goldman Sachs, Bank of America. So there's some good ones in the morning. Let's look at ASML real quick while we're waiting for other people to get here. Let's see how the options are in ASML. All right, ASML. It's only a 40-cent bid ask spread on $23, so that's good. It's an ADIV. I mean, it's kind of expensive, so let's do this. Let's just put a little. Let's just take a look at a call butterfly. But what is that? That just kind of gives you out of the box 1.3% downside, only $300 risk. If it has a good earnings report, you're probably looking at making 175. If it has a big move, that's your consolation prize. You could sell puts instead. A lot of people don't like selling calls. You could sell puts and do the same trade for a credit, same strikes. There you have it, $190 credit. So instead of your consolation prize being 175, it's 190 when you sell puts. So that's not the worst looking trade, right? I mean, let's see if we can make the buffer bigger. 2.4%. I mean, 2.4% is a pretty big head start. It's only $400 risk. If they blow out earnings, you're looking to make 100. That's the consolation prize, and that's the credit. But you could always hope. You're going to have to hold it probably till at least Thursday. But if it makes a non-move between now and Thursday, you can make a little bit more, $143, and you could hold it till Friday and hope for a non-move and maybe make. Or even a slight down move and maybe make between 100 and 300. That's not the worst trade. I'm going to put that in there. That's not the worst trade at all. Not the worst looking trade. We don't know. It depends on how it ends up, right? It could be that the president, who knows? The founder of ASML had been on the island a million times and they finally released the tapes or whatever, and he's in it, and then it could go to zero. I don't know, but I'm saying the math of it. I like the math of it. Hey, Mark and Marcus, appreciate you guys being here. Okay, so let's look back over there at earnings, and we'll see if there's anything else coming up. Morgan Stanley, Alcoa. Trying to think of any of these that there's TSM, General Electric, Cintas. So there's a few coming up. Wonder how the options are in IBKR. I've never traded options in that one before. Anyway, we'll look at that one in a few days. All right, let's see what the market's doing. Looks like the old ES is kind of pulling back. You could see the ES bear crossed last night, 11 o'clock 11 o'clock last night, but and then went up another 20 points. But anyway, it's now starting to come down. And not only now, both of the moving averages are red. I mean, both the moving averages are sloping down. Usually when you have a bear cross, you have both of the moving averages sloping down, you should get some kind of pullback. I mean, I'm trying to find the last time it happened. The last time it happened was here, bear cross, and then we had both moving averages moving down, and we dropped all the way from 62.80 to 62.60. So it's hard to fight that uptrend, right? But anyway, the bears are trying to turn it around here. The other thing that could be happening is they're just building out this trading range right here, and it's not really about the bear cross or bull cross. It's more sideways action, too high, too low, back and forth, mean reverting action. So we shall see. Now NQ's in a little bit better shape. NQ bull crossed last night, an hour after this other one bear crossed. But in that bull cross, man, that would have been a nice one to play. That one actually has worked out. Anyway, in both moving averages, short term and longer term, are still sloping up. So even Q, trend is your friend, going up. ES is, going down. They both can't be right. I guess maybe ES is following Bitcoin. Bitcoin also bear crossed, and their moving averages sloping down. 10 years up. Thank you to, who was it that brought this to my attention today? Scramble or I think it was Scramble, or it could have been Soxel. I get Soxel and Scramble mixed up. I think it was Scramble, just because of the S's in their names. Anyway, that's generally not a great sign for the market. When rates are going up, we'd rather see the opposite. Looks like there's a huge gap over the weekend where they didn't even trade. I mean, that indicates, to me, panic buying or short squeeze or something, but there could still be people down there that wanted to get filled there that did not get filled. If the market was perfectly fair and everyone could get whatever price they wanted and perfectly statistically average and stuff, everything, all distributions would look like a perfectly shaped bell curve. So that's what market profile and order flow and volume profile and stuff is trying to exploit or notice patterns in the distributions. And I love that kind of stuff. All right, so that's enough for the charts. I'm just glad I'm sharing the screen. Let's look at the high yield. This thing's still pissing me off. Gosh darn it. Let's go over here to the main database. Well, I'm thinking about putting a factor in there that does track the yield and not just as part of the total return. And I don't know. So we may have a new formulation tomorrow. Because I'm fine with Soxy and Biggie and Sput being up there. That's great. They're good funds. But Misty ought to be in the top 20 somewhere, and it isn't. So I mean, it's a weakness. It's a weakness, and it's not going to be weak anymore. I think I'm just going to add a factor in that factors in that puts the. I used to do this, that just put the yield in there by itself and averages it in with this other stuff, with the NAV return and all this other stuff. Anyway, so this will be a lot better tomorrow. So. I mean, these ones at the top are good, no doubt, but I just don't know that, I don't know that Devo needs to be ahead of Misty. In fact, I know it doesn't. So my apologies. My apologies for that. Thank you for whoever brought up the Misty not being on there to my attention. Like I say, I am kind of a people pleaser, but also, I mean, I want this to be accurate. Besides the fact that I just want everyone to be happy. I like when people get along and people are happy. True, but that's ridiculous. That's ridiculous. Okay, so Misty will be somewhere in the top 20 by tomorrow. I would assume. I'm just going to put the yield as a factor in there. It's also going to help out things like Murney and stuff, but I'll figure that out. I'll figure that out. It's not going to be the dominant factor or anything, but it should be more of a factor than just playing part in the total return. All right, so no high yield TNA. Let's go look at the buffer report. GPTY verse. I always talk about how Jay, when he changed the formula of triple QI, that he bowed to the anti-high yield woke crowd or whatever. And here I am bowing to the high yield crowd. But I mean, the Misty Mafia. But Misty is a freaking amazing story. Not just Misty, other things like Misty. I'm just using Misty as an example. Like I say, I'm afraid it's going to make Murney too high in the thing also. But hopefully, though, the NAV return will keep Murney down, even though it has great yield. I'll get the balance right. And I'll be anxious to hear. I'll try to get the balance right, and then we'll look at it tomorrow, and then I'll be anxious to hear you guys' input. All right, so SPY T down a little bit. I mean, there's really nothing going on here. 5E's down the most, and FIRS is actually up. That's nice, FIRS, but there's really, I'd call that nothing to see here. I mean, SPY's down a little bit. Most everything's down a little bit less, like it should be. VYLD, I did a video on that, and I've never followed up on that. I don't know if VYLD should even be on here, doesn't it? I think it doesn't pay a it doesn't pay a dividend. Let's look at this. I really like the strategy. It's a volatility strategy, so I'll compare it to ZVol, right, or SVol. I'll compare it to ZVol, but it's one of those kinds of strategies. And they've both been struggling lately, of course, because we had a volatility explosion in April, especially poor ZVol lost 25% of its. That gives you their beta right there. I mean, or because, the market was down 12. This thing looks like it's down 25. You can probably count on it being about twice as volatile as the SPY. It goes up on big updates too a lot. You really can't, see it here. But anyway, so VYLD, I mean, it looks a lot, it looks like it also short volatility fund. It was down about 15% in the pullback. So it looks more in line with the market. All right. But the whole reason I pulled that up to see if VYLD paid a dividend. I don't think it does. Anyway, you cannot pay a dividend and be on the buffer report, but you can't not pay a dividend and be on the other one. The other one's only for things that pay at least 6%. All right. Well, let's look back here at the index buffer report, but I never talk about that one. There's old ZVol up today. Good job, ZVol. That probably means volatility's getting crushed. KQQQ looking really good. Wow. GPTY looking good. I don't know what that one is. It's Clip. China representing today. IWMY down just about as much as the Russell. Now the Russell getting killed is the big story. Maybe the bull run's over. I mean, for now, this latest bull run's over, but it's been a heck of a run. But that's if the Russell and the S&P are down. I was thinking there's the Qs and the SPY. They both can't be right, and they're going opposite directions. I mean, they can be both right for a while, but with the Russell weighing in also, and Bitcoin weighing in, and interest rates going up, or the 10-year going up anyway. So that's probably the 10-year going up is what's hurting Russell, I would imagine. All right, let's look over here at the Yield Max Buffer Report, see what's going on in Yield Max land, if anything. I mean, you could see here, I just mainly like to see about how much upside they're getting. SMCY only getting about half of SMCI's upside. Bobo getting a more generous helping of upside. AMD, about 60%. Look at old Murney. What a dog. Murney, what are you even doing? We need to delist Murney. Come on, Jiminy Criminy. Murney, and let's compare Murney to Misty. No, let's compare it to, say, Nelson's down. Let's compare Murney to an inverse. Let's compare Murney to Crash. All right. Well, Crash did better than Murney. What does that say? What does that frickin' say? Oh my gosh. Let's just look for this quarter. And I would figure Crash should be doing pretty well lately because of Elon's situation. And it has done all right. It's doing better than Murney. All right, what do you guys want to talk about? Anything? Let's see what you guys have to say for yourself. Marcus and Max, appreciate you guys. Okay, the market profile points a picture of what the market's doing. Right now it's dumping. Correct. So what I like about that, what I was thinking about the market profile also is I have no idea. I might know Bitcoin's price, but I have no idea kind of what's been going on. Or 10-year bond. 10-year bond's an example. I have no idea. I don't know how it's traded. Where's the liquidity at? Where's the stop run and stuff? But you could tell with this one look at this, and it's just a 30-minute chart. But that right there tells me so much more than that. And I used to only look at that. And that's fine too. That'll get you a lot of the way too. You could use price and volume, and that's really good too. In fact, all that this is volume. It's just laid out in a different way. So yeah, but I love this stuff. If I was trying to get long the 10-year, I'd put in an order at 456. If I wanted to be long rates, long yield, it would be actually short the bond. Yeah, you'd be shorting the actual bond, but you'd be long rates. But I would look for for a pullback to buy somewhere, especially after that stop run. Here, the same thing happened here. They had a freaking huge bar stop run. I guarantee you. Same thing happened here. I mean, it happens all the time when you see people that weren't able to get in. Lots of times, if it goes back there, that's a sweet opportunity for a person. Not always. It depends on, you have to analyze, you have to know the rest of the stuff that's going on too. Yeah, so it was a red day. Not on the NASDAQ, it wasn't a red day though. It may not be so bad for you, Marcus, because maybe your stuff's pretty tech-centric. I mean, I don't know, but the NASDAQ actually looked pretty good, although it closed. I mean, it did close, on the lows, which is, yeah, it was still up though, unlike the other ones. Well, I guess NASDAQ futures are still barely hanging on, but yeah, it's the Russell that's getting, the Russell's the one having the problems. Gosh, darn it. Didn't I tell you guys to short the Russell last week? Did you guys not see that show? I said, when it was up here, I said, buy puts in the Russell. Oh, that's not even the Russell. Okay. The Russell's getting down a spot on the chart where dip buyers might want to get involved. 215, 216. I mean, there's a definite low volume node there, and lots of times low volume nodes will turn prices around. It's been my experience. I mean, if you were bullish, so the Russell actually, though, the other thing about the Russell is compared to like the SPY, check this nuance out. I didn't notice this. Well, yeah, I guess it's the same. It's the same. So they both bull crossed a long time ago. The thing that bear crossed on that was ES futures. They trade 24 hours, so you can get ahead of signals. You get faster signals in futures. Okay, the SPY itself has been on a massive run from 600. So, but now here today was the first time in forever, the higher moving average, which is the 50 period, which is a great moving average to use. 50 period moving average started sloping down, and the market fell and is now underneath it. Not that that means anything, but if you were long from 600, when a lot of people use the slope and the moving averages, because the fast moving average will go first, So you'll get maybe a early warning signal to, you could sell a call or you could take some money off the table. But anyway, you guys have already taken money off the table if you've ridden it all the way up here. But yeah, here's a false signal when that happened. And this can happen also. So let's say you rode this one up. This was a good bull cross after the tariffs were called off. We've essentially all been riding this one up. I allocated more aggressively, and right here. And anyway, but you guys have all been trading from the long side, right? Selling puts mainly and that kind of stuff. And doing covered calls that are out of the money, poor man covered calls where you catch upside and stuff. Well, the last time this happened, the market ran, I didn't see the lower number, but call it 550. And then it got up here to 605. And then the faster moving averages started sloping down, giving you an early warning. Maybe the trend's getting ready to shift. When they're both moving down, then the trend is almost definitely shifted. Well, that one, it didn't work out. So they don't all work out. But still, though, that one of, if you were long from down here, this is not a bad place to take some off the table or to maybe sell a call option or, to do something. So same thing here. This could just be a temporary reprieve like this one was. But still, if you're long from 600, I say take some risk off the table. Lock in, if you have calls or something, lock in your profits, roll them out, whatever you have to do. That's what I would do. That's what I would do. But if you're a bull, you could also say, okay, you could try to pick a spot to get in. You could look for a low volume node. Here's one at 620. I put this yellow line on the paper is because the reason I did there, because it's a low volume node. I said, if we go back there should be buyers there. And it went through it once, but then the next couple of times it did work. We'll see if it works again this time. But that's an area that could turn it around. Also, sometimes the low volume nodes will, they don't have to turn it around. Sometimes price will just slide through there super fast because there was no one there last time. And maybe there's no one there again for whatever reason. But then if you wanted to wait for a bigger dip, you would look at I would look at 612, 614, somewhere down here and somewhere down here. Because in other words, one of these further gaps back here. You look for a little bit more corrective action and then look to maybe allocate some long stuff if we get down here. Hey, Brad, how are you doing? Good day to sell puts on Russell tickers. Well, the only problem with selling anything nowadays, I've heard a lot of people complain that let's go look at the 1 day volatility. 1 day volatility has just been getting killed. VIX 1 day, I forget the ticker. Is it VIX? Yeah, there it is. VIX 1D. Man, look at those good old days whenever 1 day VIX was was up here. You guys were cleaning up on that part of it. There's two parts to covered calls and stuff, but you're cleaning up on one part. So, I guess you could use the moving averages. I'm always looking at mechanical systems. You just tell yourself, okay, when they're both sloping down, I'm short vol, and so long the market. But when they're both sloping up, get out or buy some VIX calls, or so get out or hedge your stuff. When you get a bull cross and they're sloping up, you're out or just buy puts, because whatever, you have a tailwind at your back, or buy a straddle. You have a tailwind at your back for volatility when volatility is increasing. Now on these 1 day options, it's a little different, but you could do that mechanically. And then, let's see how that would have worked, where you would have been. Let's see what, gosh darn it. Let's see what that would have done for you, if anything. Maybe I don't have my little sub chart down here anymore of SPY. I used to have a sub chart of SPY. It may not be there anymore. But anyway, so now you're down here. This is how much interest you could basically make, 11%. So, if Jay was selling options on these, YieldMax was, they'd pay you about 10% because they take that giant fee out. But that's about what the divvy would be on one day SPY stuff or whatever. But whereas there was, you know, it was, you were making 30% and 28% and 20% just a few months ago, or, you know, just well, late April and early May until it really got, and then, but since then it's been low. And this is, it looks like traditionally that's about where it runs. Let's get a little longer perspective on this. I don't look at the 1-day VIX chart enough. All right, so there it is from 2023. Yeah, it looks like it chills about 12 with occasional spikes. But you back here to the sloping down thing, when they're both red, just, you know, sell premium along the market, what standard stuff. That lasted all the way from March 23, which is a great time to be long the market, all the way into December 24. I remember that one well. Good time to be long the market. There was a little problem there in October of that year, but still, the on the 1 day, you're still, you know, trending down. You really don't start having problems until the election. And it was when I started getting nervous, and I wasn't looking at this, but I was looking at a bunch of stuff. But last July and August, you remember me getting a little squirrely, but it was because of all these things. And then all of a sudden, the 1 day volatility starts sloping up, moving averages start sloping up. And then that kind of culminates in what we had in February and March. It wasn't like that April move. There was all kinds of warnings prior to that April move. This thing was going belly up late February, early March, that, you know, you had plenty of warning that something's up, you know, volatility's trending up. 1 day volatility's trending up. It's not supposed to do that. But like I say, then after starting May 14th, you know, it's been clear sailing ahead. So let's go back to the chart here. Let's just put on the SPY. So in May 14th, that's the problem with anything mechanical or trend following. By the time the trend exists, it's looking at backwards data. So May 14th, the market is probably already close to all-time highs. I don't know, but let's see how much you missed. You know, market's at 586, but still 586 was a nice time to start focusing on the long side, and that it's worked out really well. All right, guys, I don't have much else to say. I'm trying to think. If there's anything we need to talk about or anything I forgot to talk about. I'll get to work on Misty. I apologize to the Misty Mafia. If there's anyone, Misty may not, you know, I'm fine with it not being number one, but I'm going to try to take another look at it and see if it should be in the top 20, you know. I haven't, Froggy. Thanks for asking. I haven't, but what I've been doing though, I make one I do kind of. I make one at the end of every week on Friday called the top 20 funds of the week. And I also show it on every daily update, but it's right here. I'll show you the chart right now. Well, there's last Friday's top 20 list. And I don't know my favorite. This isn't really my favorite. I'm really analytical and I'm number crunching. These are ones that have good number qualities to me. But my favorites are, I'm also using discretion, and I really like GPTY. I really like LFGY, and I really like ULTY. But then I also use funds that I don't really like, but I like what they give you exposure to, like GDXY from YieldMax. And I even use a fund called YQQQ, which goes up when the market goes down. And I don't like it. I don't think it's going to make a lot of money, but it dampens some of the volatility in my portfolio. But anyway, so as far as mechanically, and I'm getting ready to change this a little bit, but these are the ones I think that have a lot of safety. This is a good safe list. These are the ones that get a lot of safety and a lot of NAV return for your buck. That's why Misty's not on. That's why Misty doesn't even make the top 20, because this overly emphasizes NAV return and underemphasizes yield. But I'll blend it better. But yeah, I really think that Biggie, SPUT, I mean, all of these are good funds, and the ones I like are on here too. I mean, the ones GPTY is somewhere on here, right? Yeah, GPTY is right there. And I measure these, the number means how many days they are above average. We know how far each stocks have an average true range, which is how far they move in a day. So you can use average true ranges to compare different types of stocks with each other. Some stocks move a lot, some move a little, but this looks at kind of an apples to apples comparison and tries to find the funds that are that have the least risk with the most amount of potential reward. But a lot of people love CLM. So CLM is it's 3.5 days. The other thing is all of these are doing well. All of these, the above average is there's 100 of these in a universe, and I compare them all with each other. So all of these are doing pretty well. I mean, GPTY is 4 days above average. I'm looking at the trend, and this is technical analysis and moving averages, but it also considers the other stuff. So so I do that every day, Froggy. But I thank you for asking. I have a little bit of USOI. I just 2% or something. I need to freaking fix my brother-in-law's portfolio. I just keep saying I'm going to do that, but I really have to do it this week. So, but now that I'm going to use this to fix it with, and I'm going to make a video showing you how I used this. But I'll work on the formula some more for this, and we'll take a look at this tomorrow and see if we can get a better blend. Because like I say, I'm fine with Misty not being number one, but Misty ought to be ahead of Dizzo. I mean, nothing wrong with Dizzo. Misty ought to be ahead of IDVO. It ought to figure in the mix somewhere, because it is a darn good fund. So be looking for that tomorrow. There's always something to look forward to, right? And I'll be anxious to look at I'll be anxious to see how these earnings trades, how they start coming out, and if they come in or whatever, or if we hit them. I did a Netflix broken wing butterfly, sold a put broken wing butterfly, got like a $110 credit for it and a 2% buffer or whatever I'm trying to make. And it was about $500 risk. It was the same one I showed in the thing. I just went off and did it afterwards. All right, guys. Well, I appreciate y'all for being here. I will see you in the morning, or get with me in Discord, and we can, if there's anything I forgot to talk about or anything that I said wrong, or you want to challenge or whatever, hit me up in Discord. All right. You guys have a wonderful afternoon, and I will talk to you later. Thank you for being here, Froggy.